Welcome to TheoTrade. This is Don Kaufman. Here we are. It's January 18th, 2017. You are watching the Theo Night video. All right. Well, we had quite another day of, I would have to call this relative boredom inside of the larger market. I know, who wants to listen to a video about boredom over here? But there's a few important points to be made. First and foremost, the S&P futures barely crested over 1 million contracts, not exactly heart-pumping volatility out there. And if you look at the S&P contracts on an intraday basis, well, this is what we have tendency to call a little bit of slop trade. I mean, sure, the S&P's ground a bit higher over here, but on what? Okay. And the other thing it's interesting today is, so yeah, the S&P's grind a little higher. The NASDAQ, it's higher. But listen, the NASDAQ, it's higher predominantly in the after hours. It shot up, okay, because we're about 10, 12 minutes after the close. And the NASDAQ ground a little bit higher because of Netflix. It came out with earnings. We'll talk about that momentarily. But generally speaking, the market's, it's a little bit of a slop fest out there. The other thing that really stood out to me, though, is that the volatility futures, were just boring throughout the course of the day. But somebody sees something here, because volatility was actually bid higher towards the closing bell. Right. So you have volatility being bid up on a day that the market's just kind of sloppy and quiet over there. Looks a little bit unusual. In addition to it, the bonds are getting rocked once again to the downside. But here is something, again, of, I would say, pretty vast importance. So the bonds, after dipping hard over here, okay, and they just, again, got pushed lower and lower, all the way, again, from the 177 handle to the 147 handle. Again, some of the largest moves ever seen in bonds. They almost feel like they're going to roll back over again. But there's something quite notable here about the bonds, which have kind of leveled out right around this 151, 153 kind of territory. Okay, and what's notable about the bonds selling off today, and again, if you don't look at bonds that often, we're like, what is this, like $1.21? No, it's a 0.21 ticks. Okay. The ticks, 16 ticks, for example, is a half a point move. So you see a 0.21 ticks. This is a big move. It's a really big down move inside of the bond product. And when you see bonds selling off, that brings interest rates higher. So, for interest rates, you cruise over to the TNX over here, and what happens? The interest rates get bid back up. And typically when interest rates are going higher, financials are affected very, very positively. Sure, financials were up today, okay, but they haven't even recouped some of the hit that they took yesterday. And if you do take a look at a few of the financial stocks out there, so we can start with like Bank of America got bid back up, but really got whacked hard inside of yesterday's trade, all right, getting some of it back today. JP Morgan, though, barely having an up move. Citi actually ending up down another 1.7% today. And if you look again, the financials were very much a mixed bag of goods. Now, Goldman Sachs also down on the day, but just released earnings over here. So financials is something that not only been watching very, very carefully in the last couple of trading sessions, but moving forward, these are the products you need to be watching, are financials. They're going to give you the feel for the next major move inside of the S&P 500. Now, moving kind of on away from broad market discussion, let's get into a little bit of earnings. So we're kicking off once again, and 4 times a year we get to go through earnings, and it seems like 4 times a year, sure, we have new people listening to like TheoTrade and so forth, but let's give you the entire kind of the lowdown on earnings. And the first real major earnings announcement that has come out here is Netflix. Now, for those of you that don't know any history of Netflix, okay, Netflix ended the trading session at 133 and change. Right now, this bid and offer, it's live. I just froze the screen, but it's live. So where are we at? We're about $10 higher, okay, from the close. Netflix doesn't matter what the numbers are. People get all infatuated, the number is this and the number of subscribers. Does it matter? Are you going to be able to really disseminate the information on the earnings faster than, for instance, an algorithm? Absolutely not. So why even bother reading some of the news out there? Just look at the price. Listen, here's where it closed. It's $10 higher. The expectations, okay, are $12. Now, recognize that I'm recording this, right? And the market's moving all over the place, but recognize I'm recording this. Conference call hasn't happened yet. Reed Hastings, obviously CEO of Netflix, hasn't come out and said anything yet. So the stock, again, has approximately a $12 expected move. Now, the reason I'm mentioning this, and I'm very matter of fact when it comes to earnings announcements, is that what can you do as a trader around an earnings announcement? And again, each quarter, no matter how long you listen to TheoTrade, each quarter I will bring this up in great depth because it's such an important concept that's always overlooked. See, every quarter you get new people that are involved in options, and they're always looking for some type of edge inside of an earnings announcement. But the reality is, listen, I know the volatility inside of Netflix is high. Like, I know the volatility up here is 130%. Yada, yada, yada. Okay, it's 130% for a reason. The marketplace, both buyers and sellers, have come together, agreed on price, and that price happens to lead to about a $12 expected move. Okay, how ironic right now that Netflix is rallying almost to $12. And again, this is before the real conference call is kicked off over here. My guess is, Netflix opens tomorrow, could be in and around this number. Although Netflix has also been known to be the widow maker. That's right. I call it the widow maker of earnings announcements. People go out and they sell options naked around Netflix, and they'll find out what that means. I mean, Netflix has had wild moves around earnings. I mean, moves of 20 to 30% of the stock price. In fact, there was one move where the stock moved from 100 to 144 a couple of years back, where if you sold options naked, that stuff can wipe you out. When it comes to earnings announcements, okay, you can take a bullish shot. In this case, hey, Netflix is up right now. You could take a bearish shot, okay, or you can take a neutral shot, and that's it. And I want you guys to recognize when I say a bullish shot, that doesn't mean buying calls. You don't buy calls in 130% implied volatility. Moreover, you don't buy puts in 130% implied volatility. You have to go into these trades very strategic, okay, very carefully, knowing that this was, knowing this is a $133 product. If I was to line up a trade earlier today, I would, for the most part, buy like 134 puts, okay, buy the 134 puts, sell the 132 puts against it. Look, this is a bearish trade. The maximum sustainable risk is $1. That's it. It's risk a buck to be able to make a buck, okay? If you want your bearish shot, ladies and gentlemen, there it is. Now, again, this is a little bit after the fact, but in a time like this, markets are a little slow, okay? Hey, it's a good time to talk about earnings because you're going to get infatuated by Apple, you're going to get infatuated by Amazon and Google, okay? Obviously, Netflix is here, and then Facebook comes out, and then, oh my, okay? Microsoft. Does Microsoft infatuate you? Doesn't do it for me either. Nevertheless, all I'm pointing out is that earnings, they're not what you think they are, all right? You can get bullish. You can get bearish. So here's the bearish trade, yada, 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 134, 132, close that out. If I wanted to get bullish, I could buy the 132, 134 spread. Look, it costs $1. There's your bullish trade. Now you do one or the other. So there's one bullish trade, one bearish trade I just showed. Then you can do net neutral. Net neutral is you can go out there and like sell iron condors, or you can buy an iron condor. And people, that's really it. I don't want people to get infatuated with this idea, again, that there's some major edge that they're missing in earnings announcements. That generally speaking, okay, the earnings are almost priced to perfection. And it's not to be disheartening out there. Listen, if you're going to put capital at risk, realize how efficient that the marketplace happens to be. And that if you're going to put capital at risk, you have to have more than, I hope, I think. Listen, if you want to trade earnings, take small strategic shots. Get bullish or get bearish out there, or, sell an iron condor, or you could even buy an iron condor. But don't have the belief that you're going to find some hidden gem inside of an earnings announcement. Okay, sure, you can hit a home run in earnings. It's a very exciting time. It's 130% implied volatility. But another way of thinking of 130% implied volatility, well, let me tell you what that really means. 130% implied volatility means there's a heck of a lot of risk. That's a Mack truck headed for you specifically. Do you want to get in front of it? Doesn't matter whether you get bullish, whether you get bearish, whether you get neutral, okay? You have 130% implied volatility that's about to pounce on top of your head. Do you really want to position yourself in front of it? And that's something that you need to ask yourself prior to these types of earnings announcements, okay? Earnings, it's a roll of the dice. Predominantly, what we try to do here at TheoTrade is build smart, strategic positions over time that do, okay, have some type of definitive edge. With that, again, we'll talk a lot about earnings in the days to come here at TheoTrade. Nevertheless, again, it's an exciting time over here. Remember what your options are. You can get bullish, you can get bearish, okay? Or you can sell some premium, or you can buy some premium. That's it. It's one of 4 positions around your earnings, okay? The rest of the week over here, I'll tell you what, there's not a lot of implied volatility being priced in, meaning there's just not a lot of risk being priced into markets. Nevertheless, okay, the market appears, again, blind to some of the risks at hand. Think about that. Thanks, everybody, for joining us here at TheoTrade. I'll be in the TheoTrade chat room all throughout the course of this week. Have a great evening, everybody. Bye-bye.